Arizona's flash flood conditions and unique geography, desert terrain, and hard soil. Arizona's dry, rocky desert soil doesn't absorb water well. When rain falls, it runs off quickly, increasing flood risk, especially in washes, canyons, and dry riverbeds. Monsoon season. June-September. Sudden, intense summer thunderstorms during monsoon season can drop a large amount of rain in a short time, triggering flash floods with little warning. Canyons, arroyos, and urban runoff. Narrow canyons and steep washes, like slot canyons in northern AZ or dry washes in the south, funnel water rapidly, creating powerful flood surges. In cities, paved areas worsen flooding due to limited drainage. Elevation extremes. From high mountains to low desert basins, Arizona's elevation changes cause runoff to accelerate downhill, making mountainous regions especially prone to sudden flash flooding. Notable flood-prone areas in Arizona. Phoenix metro area. The Salt River and its tributaries can cause widespread flooding during heavy rainfall events. Notably, in September 2014, record-setting rainfall led to significant flooding across the valley, submerging vehicles and inundating neighborhoods. Havasu Canyon, Supai Village. This remote area is susceptible to flash floods due to its narrow canyons. In August 2024, flash flooding destroyed infrastructure and stranded hundreds of tourists, prompting federal emergency aid for the Havasupai tribe. Gila Bend and Yuma. These regions have experienced prolonged flooding events. For instance, in 1993, the Gila River caused extensive flooding, closing U.S. Highway 95 near Yuma for nearly 6 months. Maricopa County communities, areas such as Buckeye, Gila Bend, and Surprise are identified as flood-prone zones. The county actively manages floodplain information to mitigate risks. How infrequent but intense rainfall leads to flood risk. Dry, compacted soil can't absorb water. Quickly, in areas like Arizona, long dry spells cause soil to harden. When a sudden downpour hits, water runs off instead of soaking in, leading to rapid surface flooding. Storms overwhelm natural and man-made drainage. Intense rainfall in a short period can overwhelm washes, storm drains, and rivers, causing flash floods even in areas that rarely see water. Buildup of debris and dust increases. Runoff. Infrequent rain allows debris, dust, and vegetation to accumulate. When it finally rains, these materials are swept into waterways, clogging systems and worsening floods. Urban development and changes in water drainage. More pavement. Less absorption. Urban areas replace natural soil with concrete, asphalt, and rooftops. These hard surfaces prevent rainwater from soaking into the ground, dramatically increasing surface runoff. Storm drains can be overwhelmed. City drainage systems are often not designed for the extreme rainfall events common in places like Arizona. Sudden heavy rain can overflow these systems, causing localized streets and property flooding. Alters natural flow paths. Construction can disrupt or reroute natural washes and floodplains. When natural drainage is blocked or narrowed, water backs up in unexpected areas, flooding roads, homes, and businesses. Loss of vegetation development removes plants and trees that typically help absorb water and slow runoff. Without this natural barrier, water flows faster and more forcefully. What a lender looks for in a flood zone. Flood zone designation, FEMA maps. Lenders check the FEMA Flood Insurance Rate Map, FIRM, to determine if the property lies in a Special Flood Hazard Area, SFHA, like Zones A or V. If it does, flood insurance is mandatory for most federally backed loans, FHA, VA, USDA, Fannie Mae, Freddie Mac. Flood insurance requirement. If the property is in a high-risk zone, the borrower must obtain and maintain flood insurance. The policy must typically meet NFIP, National Flood Insurance Program, minimum standards. Coverage must equal the lesser of the loan amount, the value of the structure. The NFIP max coverage limit, $250,000 for residential. Elevation certificate, sometimes required. Lenders may ask for an elevation certificate to assess the actual risk and insurance cost. If the home is elevated above the base flood elevation, BFE, it may qualify for lower insurance premiums. Impact on property value and loan risk properties in flood zones may have lower market values or resale concerns. Higher risk of default if the borrower can't afford flood insurance. Potentially higher interest rates or stricter underwriting due to added risk. Private versus NFIP insurance lenders may accept private flood insurance, but it must meet or exceed NFIP standards. They'll review coverage limits policy language, financial strength of the insurer. This could be a big surprise for the buyer if the cost is very high. The cost of flood insurance in Arizona varies based on factors such as location, property elevation, and flood risk. Here's an overview. Average flood insurance costs in Arizona, statewide average, approximately $765 to $775 per year, slightly below the national average of $949 per year. City-specific averages: Phoenix, $751, Dawn, Oro 6, Tucson, Juan, $238, Odin, $80, Mesa, Juan the 66, Tuno, Chandler, $1,015, $55, Scottsdale, $735, $83, Gilbert, $1,249, $932, Tempe, $159, $44, Peoria, $1,216, $92, Surprise, $193, $52, Glendale, $998, $30. Notable high-cost areas: Nogales, $188, $42, Sedona, $1,274, Prescott, $935, Flagstaff, $160. Factors influencing premiums. Several factors determine flood insurance premiums. Flood zone designation. Properties in high-risk areas, e.g., FEMA zones A or V, typically incur higher premiums. Elevation. Homes situated above the base, flood elevation, BFE, may benefit from reduced rates. Construction details. The age, design, and materials of a home can impact insurance costs. Coverage amount. Higher coverage limits for the structure and contents will increase premiums. Deductibles. Opting for higher deductibles can lower annual premiums. Coverage limits under the National Flood Insurance Program, NFIP. Residential properties, up to $250,000 for the building and $100,000 for contents. Businesses, up to $500,000 for the building and $500,000 for contents. It may be an amount that throws their ratios out of whack. If lender requires flood insurance, buyer can cancel updated February 2017 issue. All inspections have been performed, and the transaction is ready to close. For the first time, the lender states that flood insurance will be required. Due to the cost of the flood insurance, the buyer no longer qualifies for the loan. Can the buyer cancel the contract and receive the return of the earnest money? Answer: probably. Under Section 6D of the contract, the buyer was required to determine whether flood insurance was required and the cost of any flood insurance during the inspection period. Although the buyer did not cancel the contract at that time and accepted the cost of any flood insurance, the financing contingency still remained. Therefore, if the buyer has made a diligent and good faith effort to qualify for the financing and cannot because of the cost of the flood insurance, the buyer should be able to cancel the contract and receive the return of the earnest money.